Morning, good morning. Happy Monday, everybody. Just letting everybody get into the meeting from the waiting room. Make sure their audio is connected. Let me know if you are not seeing my screen because you should be. Good morning to you, Perry. Okay. Let everybody get in. Uh, excuse me. Okay. Officially, good morning. Happy Monday. Welcome out to the Market Watch Group weekly opening bell. My name is Scott. We are getting together to discuss market conditions as we move into this week's open. It's interesting to see that we actually got a bit of market assessment from a Sunday news show, right? From Jerome Powell coming on to 60 Minutes and reiterating what he had said earlier in the week about the caution of cutting rates too soon. So even though we've seen this adjustment, right? We've seen this adjustment of expectations. You're like, yeah, it probably won't be until the second quarter. But what if they do a surprise cut in March? And it's like the expectation was moving more towards that push it, but then it's just even still you have people's idea of what might happen creeping into that. Well, they still might do it in March. It just doesn't look like that. And I think we're going to see that. So that's what we're looking at. It's just the market's trying to get a sense of, at what point can we move back into this more accommodative stance? And the Fed is basically like, look, it's, we keep trying to tell you we have to be measured in that approach. So we'll see what the impact of that is. Here's our disclaimers, as always. They're in your email as well. Here is our agenda. We're going to look at the opening futures and news. We'll see how the market is looking at what it gathered, what it received by way of information over the weekend, and how it's now processing that into the market. We'll look at the economic calendar in regards to what we have coming out this week. And we'll look at what our posture is as a result if you happen to miss the Sunday morning session. Mindset for open trades. Okay, so let's talk about that, right? Of course, we need to discuss mindset for open trades because we probably are carrying some bullish trades from last week. There was definitely signals that occurred. So those trades are definitely going to be disrupted. Of course, you've got to be able to be now think like, okay, what do I do with this? We had setups developing. Um, we had setups developing in the financial market. We're kind of looking to see, do those trades continue to develop? Good morning, Bob. Good to see you. Um, looks like someone started a question. Okay. Yes. Can I please advise now for missed sessions? If you miss any sessions, those are sent. The link for those are attached to every email. So every day, today when we're done, I'll type up a summary email. And if anyone misses today, they'll be able to look at the summary and access the link for the recording. So all your emails day by day have it. That's for the live sessions. All of the educational sessions are recorded and archived in the content library. And I'll have to look, but I'll even check just to see if they all pop up. I believe they all pop up on our YouTube channel. And so, yes, I can put that link in the YouTube channel link so that you can find information that way as well. All right. So, yeah, do we still have an early week shopping list? Are there setups that are developing that we think might turn into trades? And then what trading plan are we what trading plan section are we working on this week? We're working on record keeping, section 6, making sure that you have a strong record keeping habit in place. Of course, I have provided record keeping templates, so I would certainly recommend that. All right, let's dive into it. We've got futures that are down. Let's pull up Yahoo here for just a second. And you can see negative 0.29 for the S&P, identical for the Dow. The NASDAQ only 0.16 down, so it's not down very much at all, right? Hardly at all. And the Russell is down over 1%. Why is that? Because, again, as you look at what are we building our anticipation around, the Fed, who is most impacted by the Fed? Small caps, right? Small caps really want they really want those interest rates to come down. That's the absolute best thing for them. But in the meantime, they're getting yanked around as the market's deciding how likely is it, when is it going to happen. So all the futures are down. NASDAQ least impacted. Russell most impacted. Oil is flat. It's up a little bit. And you can see why Wall Street is still bullish as rate cut hopes fade. I don't think that they're fading. I think that they're just shifting to be more realistic, right? I can remember us having discussions when we're like, yeah, it seems like they probably should leave it alone and likely wait until Q2. That's a more pragmatic. Is it a more bullish? I mean, of course, the market would love them to just say, but it's not about the market. I mean, that's ideally, right? They're going to hold off until they're convinced that the objective is not get the stock market to ever increasing highs. It's make sure that inflation gets, and again, they say 2, but it's if it gets near 2, right? They're not going to, when it gets the closer to the mid 2s, they're going to be pretty convinced and it's going to be fine. But that's where we're at. So we're a little bit sensitive to that. And but what it says, why is Wall Street still bullish as rate cut hopes fade? Obviously, it's the strength of the economy everywhere else. So anyways, that's where we're at. Futures are down. What does that mean? It means that if you put on trades, now the trades that we had momentum for last week were more tech oriented, and that's the least impacted. So you might just be like, oh, it's a little hiccup. Of course, trades hiccup sometimes. It might hiccup, it might start to turn. That's what this tells us is if we have any bullish trades, we really want to make sure we have a good sense of what is our plan for that. right? What is our plan for that? What are we going to do with that? Um, that's the primary consideration right now. If you're waiting for trades, then you're saying to yourself, oh, this is just bringing things one day. We've been waiting for consolidations. And now we're saying some things have consolidated, like financials, to the point where if they were to turn, we'd be like, okay, let's be ready to go. But if they continue, if there's a little more consolidation, like what we're seeing right now, right, then we're just going to be thinking to ourselves, oh, okay, then, that's part of the consolidation. What was another piece of news? You can see here, McDonald's sales fall short amid earnings beat. So this is one of those where if we go look at how they're going to open, how much time do we have? 2 minutes. If we go look at MCD, um, nice trend sideways, opening where? 286. So they're going to gap down to about right here on the open. If you look at the earnings, if all you did was come here and you said, "Oh, they were expecting 280, they got 295," you'd be like, "Wait a second, they beat expectations. What? Why are they dropping $12? Because they lowered guidance, right? Earnings beat, sales fall short. Guidance is guidance is showing a decline, then the market's going to react. So we're seeing that drop. Meta flipped entire narrative on AI investments. Analyst says, I'll tell you what, Meta smashed their earnings. That's for sure. That is for sure. Okay. I mean, I think that's it. You can see as you get down, there's less and less that's actually talking about and directly about what's impacting market movement. Good morning, Michael. Good to see you. So we're about to open here in the next few seconds. Let's look at the economic calendar to see. Nothing scheduled for today. So, all right. Let's go take a look. You can see there's the Walmart, or there's the McDonald's gap down right here. Now, like we said, what is this? Is this panic? No, this is pause. This is a pause. Your stochastics, everything about this looks fine. Even if it pauses all day, one day at this point is just a pause for me. However, of course, we have to be prepared for what if it becomes more. So let me just see if I can't get. We'll watch the initial reaction as this opens, and you can see that it's opening down, and we have a little bit of continuation, a little bit of sellers continuation. Okay, this is part of the adjustment. What are we adjusting to? And we're gonna go look. I'm gonna give it a little more time to make sure it's fresh. We're gonna go look at the Fed, our probability watch, our Fed watch. You probably noticed that a lot more people are talking about those probabilities on podcasts and programs, CNBC, etc., talking about the probability of the Fed. They're talking about that tool that we're accessing. So, okay, I do want to look also real quickly at the VIX. What is the? Okay, I don't know why. Every time I click on the VIX, it thinks I want to trade it. So we've popped up a little bit, right? We've popped up a little bit, and we've said the VIX is a bit choppy right now. But the overall assessment that we're currently in is still holding, which is a lower high. Technically, it gave us this signal right here. But now it's wavering a little bit of wavering, but it's overall, you can see your stochastic still looks good. If this were just one day up here and then Uh, Tomorrow we start falling and we see something like this, we're still making these same assumptions. If it's just a blip. Now, if it breaks through these, remember that this little red line does not count. If you see right here, this right there, that didn't actually happen. It's a bad read in the chart. I'm going to see if I can't erase that somehow. Color. Okay. I can at least move it out of the way a little bit. Okay, so there you go. That's really what it should look like. That I feel like that shadow was almost skewing my perspective, and it's weird when the chart does that. Okay, so what do we have now? So if we break this over the next day, so if tomorrow we have a down day and this busts out right there, yeah, that for me would be problematic. That'd be concerning, right? I would look at that and think, oh, why are we seeing a surge in the volatility? So, okay, it hasn't happened yet, but that's certainly something that I want to be paying attention to as we move from today into tomorrow. You know, we were looking for this VIX to come into a downward consolidation, right? That's if we break out of it. In fact, because we got a piece of that lower high, I actually raised my score on the VIX. I scored it to be more bullish. The more we expect the VIX to go down, the more we're bullish on our scoring on the VIX. I'll show you the posture for anyone who missed it here in just a minute. So today looks fine. Tomorrow, we want this lower move, which would indicate that the fear is continuing to de-escalate. And if we got the upper move, if we got it where it looked like it was breaking out of that high, yeah, then you're taking different steps with bullish trades that you're in. Then you're like, whoa, right? You're tightening stops very, very quickly. In fact, you're kind of thinking a little bit about that today. What if tomorrow this thing turned around? So any bullish trade you have, that what if should be going through your mind. And you should have a sense of how am I going to account for that? Okay. Let's run real quickly, finish up. So economic calendar, we have very minimal reports. Very minimal reports. I was on the wrong day. Even today here, you can see ISM services. That's not a market moving report. Tomorrow, we have a bunch of regional Fed speak. Wednesday, a couple of minor reports and more Fed speak. Thursday, jobless claims. Friday, a minor report and one more bit of Fed speak. So this week is really just like minor reports, more earnings, and Fed speak. That's it. Right? That's what we have. Okay. Probabilities. Just yesterday, when we looked at these, it was I believe it was like 60 to 38. And now today you can see we're back to almost 5-1 against the probability that there's now, this is the reality. There was still just that, oh, but what if there's a surprise? Right? Oh, but what if? And now there's less of that. There's less people like, well, maybe they'll give us there's just not much expectation for that. If we go to the May report, and I'll tell you this, if what we're doing right now is building these expectations in, you can see now when you look at May, there's still not quite, but it's almost 2-1 getting it versus not, and there's hardly any expectation of all that we're going to be a half a point lower. Before there was like, oh, we might be a half. I was like, what? We might be a half a point lower. This looks more like what we had discussed, where we're like, yeah, it really looks like it's going to be May. I know a couple of people in the room think June, and so they're like, yeah, I'm not surprised at all by this. But here's what I think: if the market is pricing these expectations in, what does that mean? It means that the market is subsiding itself. So people are like, well, why is it still bullish if we're not going to get a cut? Well, we're not getting a cut because things are economically strong and that we can sustain a little longer to make sure we get just the right conditions for sustainable growth. So in the long term, that's a good thing. In the short term, how bad is the market's reaction? That's our question right now. How bad is this? Oh, the market's adjusting to this new reality. How bad is it? Let's take a quick peek and let's decide. From a VIX standpoint, we're at 14. 14. Does that look fearful? No, not even a little bit, right? How does our trend look? Does that look like, oh man, look at the market making these crazy adjustments to this new reality? No, looks like it's all quite sustainable. So for me, I think this helps to illustrate the market's resilience in its bullishness because of the underlying strength and because it seems like the conditions are lining up that there's not going to be any hard landing, that we've achieved the soft landing, that unemployment, that the labor market was basically at this point undisrupted, just smooth the whole time. Corporate earnings have stayed. That's where everyone's like, oh, well, the earnings are all going to get terrible. They haven't. They're all, everything's holding up. Great. Okay. Um, okay. 5 minute chart. VIX has big spike up. We'll take a look at that. Definitely. What sector to defense stocks fall into? Typically, they're going to be in your industrials. Let me pop up I don't think we're going to have much of a read here yet, but if you look, this has a bit of a delay. If you look in industrials here, you have aerospace and defense. So that's where your RTX, which used to be Raytheon, Lockheed Martin, Northrop Grumman, General Dynamics, and then a little bit more of these. So these here are in your industrials, which they look, pretty good as far as so does industrials, right? If you look at our posture this week, and then we're going to crack through our watch list. I scored long-term trend stayed the same. I scored the short-term trend up. I scored volume up, and I scored the VIX up. So my score improved. It's strong. I'm a strong bull right now. It's a good market. I'm looking to trade into this as I can without over trading. I'm not going to force trades. There's no need. I'm not going to over trade, right? There's still a little bit of shakiness. Right? There's a little bit of shakiness around the Fed and the expectations and how we're processing it in. There's some trepidation about that. I feel based on the scoring and based on how things are holding up that it looks pretty strong. Okay. Okay, let's look at the watch list. That's what we need to do. Look at the watch list. We have a list of trades that we think are developing that we went through. I sent out an alert. Oh, I sent out an email last night around, I don't know, 5, 6 p.m. my time, 7, 8 p.m. Eastern, with the Discord instructions and link for anyone who is not on the group, because I am looking to push an alert this week as it comes. Again, not going to force. I'm just going to let it come. So that's going to come via Discord. Apple. Okay, so Apple held this support level. we had no interest in Apple at this point. We're just kind of rooting for Apple. So to see it pop up, great. What we would like to see is Apple not fall back down to 180. If this is, if we'd like to see it go a little higher. I mean, you can see even now it's actually up a little bit. It gapped up, pulled back, still above Friday's close. We'd love to see this thing get above the 50, then come back and make a higher low. If it does that, I'd trade the higher low. That's not on the radar right now. That's just like, hey, we watch Apple because it's very important in the grand scheme of the market. Right? Okay. But that was never something we thought about because you had earnings and you had this the way this thing was moving. We're just watching to see. AIG, still setting up. You can see the stochastics is turning, but I don't know that we quite have what we're looking for just yet on this. It's still kind of holding this. I don't know why I can't draw a straight line with my mouse, but it's still kind of holding. I'd like to see it pop through that as well. You do have time before earnings, and where does this stock live? Lives in financials. AMD. AMD is one that I would imagine some people took last week. Anticipatory trade here, confirmed in the early part here. Okay. For a down day, this thing's up 0.5%, which means for a pause, it's just still on track. So what would my mindset be for this? Nothing. Holding on. Looks good. Amgen at resistance, no trade for us. Amazon post earnings, we're waiting to see what comes next. AXP. So some of the financials, it's like, are we sure it's done? This one's still kind of grinding around a resistance. We've got to wait there. Boeing. We're watching Boeing, but Boeing's not something I would trade until it breaks. Breaks what? Breaks the consolidation. It was consolidating this way. Now it's consolidating this way. Right? I need to see this thing bust out, come back, hold up, ready to go. Have we seen that before? Yeah, happened right there. Right? And you can see when things are coming down, sometimes you get these false breakouts. That's why we wait for it to pull back and make a higher low, which this did not do. So then what? We waited for the next time. It broke out. Oh, there's that higher high, like we want to see right there. Then we wait for the pullback. Then what? Then we get the higher low. This thing crosses. And that's when we're like, okay, the shift, the pull, the tug of war between buyers and sellers has now, we are convinced the buyers have regained control. Right now, there's nothing that tells us the buyers are making any, lasting attempts. So if you're ever wondering, hey, what does a reversal look like? It looks like that. BK, close financials, right? BLDR. That might be one that you carried over the weekend if you took the trade that came back here. This was on our watch list. We talked about this. That was a nice entry. It's moved. If you still have a piece, you got to be thinking, okay, is this thing coming to an end and am I ready to take profits? But that's nice. You're taking profits. Where is this out of? Industrials. BLK. See, BLK was always concerning for me. I actually think I'm going to take it off the list because it's distracting now. We have so many good candidates. I just never really liked this, and it kind of was a tricky there, but I feel like it's not moving. Yeah, you know what? It's gone. BlackRock is gone. Done. BX looks nice. Right? This one looks nice. It went up, got to a new high, pulled back. So here you can see this one had its consolidation and it more aggressively recovered. Now we're on the higher low part where we're looking for it to hold above the 50. We're looking for this to turn and we're saying there is an entry for us somewhere in here. Now, are we going to trade all of these financials? Of course not. Probably a couple of them. For me, I'll probably give one alert. I'm not going to give multiple alerts from the same sector because I want you to hopefully you find one and I give you one or something along those lines. I'm not sure how that'll play out. We'll see. Okay. Citigroup, same thing, right? You'll notice there's a nice correlation. There's multiple of these financials. So that's why I'm saying we're not going to trade them all, but there's plenty for us to choose from to find and cultivate the best trade. What looks the best? That's what I'm looking for me. That's what the alert will look like. But I would still be saying, yeah, that's where we're looking right now is financials. Caterpillar smashed their earnings, gapped higher. Again, love it, Press. Thank you for saying that. He said, I finally understood that second bounce. That second bounce, man, that's key, right? I agree. It takes a little while sometimes. You get antsy, right? I get it. Capital One, very close right here. Again, where's Capital One? Financials. Sellers have come in. The buyers are just sort of right now. What? We haven't seen sellers for a couple of days. Are the buyers fully convincing us? No, but it's knocking on the door. Oil. The thing about this is the oil stock I've chosen. We're coming up on earnings. That'll be interesting to watch, but I don't have anything that makes me interested in trading oil right now. Costco, this is another one that you might still be in carrying from this signal back here when we got that. And this trade has moved on up. If you were in it, maybe you took some profit on Friday before the weekend. Maybe you're still carrying it and you're saying, okay, if you look at your stochastics, this thing looks like it could go a little further. All through here, it looked like it was coming to an end, and then it just kind of went a little further. So you might give Costco a little bit more opportunity. CrowdStrike. So here's one you might have taken. This was viable, in my opinion, on Friday. This thing gave a turn, viable. Today, it's giving it back. So if you were in this one, you would be having a bit of a losing morning. Okay, that's a losing morning. Doesn't mean it's gone wrong, but this one is certainly under threat. Let's say. If you're in any of these and you kind of say, hey, I'm in it. What should I be thinking? Make sure you flag it for me. CSX is overbought. DAL, it's still kind of in maybe territory, I guess. I'm not sure I'm interested. I want to watch a little longer. It's not like I'm like, I love trading airlines, so let's see if I can find that. I'm curious about airlines. Same with home builders. Maybe it's starting to recover. Okay, the Dow just kind of flat, down 0.39. So here's another one that you might have taken and you're carrying, and is you're not down, because if you got in at a good time on this trade, you're probably still up, but you're saying, oh, is this thing going to pause? So yeah, if I was in something on like this, I would definitely be tightening up and saying, I'm not going to let it break back below this low. If you haven't taken profits and you have some, you might take a little. That's what I'd be thinking with some of these, where it's like, ooh, we might consolidate just a bit further. How much can I sustain? That's the question. GE, still bullish. Is riding along. Gold, kind of sideways. Google, trying to recover. It's got to do more than that to convince us. Home Depot, kind of sideways. Now, Home Depot is consumer discretionary, which it got a little bump from Amazon, which is Amazon's now pulling back. So, yeah, let's still be careful with consumer discretionary. IBM, I think, is still setting up. It's trying to hold this support level, 184. If it holds and turns, we have an opportunity, definitely. Intel, nothing for us. IWM, here we are, We're at the 50. This is crunch time. Hold the line. IWM, hold the line. We need a little rally cry for the small caps to hold the line. That would be great. If we break that line, our posture is going to deteriorate a little bit. And we're going to say, oh, it's too much. The small caps just can't wait any longer. The Fed has let them down. No, we don't think the Fed lets down groups of stocks. But that definitely is you can see here, held the line, bounced back up. We're at the line again. We want to be, no, is it critical if it doesn't? No, I mean, we're just kind of looking at the 50 as like, hey, that's a higher low. It's the 50. I think it's important. We'll see what happens. JP Morgan still, again, another financial that made a new high is mildly pulling back, which makes me think that the buyers are ready to go again anytime. Definitely the signals that we have are still developing in financials for the most part. We thought tech as well, but you'll notice like CrowdStrike gave a signal, but it's a little bit, pausing. Here is Meta after earnings. Okay, you got to figure. There's nothing we can do with this, but wait to see where it finds its next support level. Microsoft tried to give a post earnings bump and it's just kind of stalling out. We'll see. Bob just got out of Nvidia for a nice gain. Love it. Netflix is still setting up, I would say. Nvidia, my God, that thing is just an absolute monster. What a monster that is. That could be the abandoned baby pattern. It gaps up and then the next day it gaps back down. That is a nice take profit for sure. Picard is another industrial that gave a signal last week here in this transition. Looks good. That's one that if you held it, I'd be like, great, looks fine. Keep running. QQQ. It's a pause. We're down 0.15. Right now it's just a pause. Do we want to be somewhat cautious? Yes. Do we want to panic? No. Right? The professor is cautious. The chimp panics. Be the professor. Here's SMCI. Look at this thing. It's another one like Nvidia, just a monster. It's just doesn't give us opportunities to trade it. Even back here was like, we're like, oh, let's get ready for this. And then by the time you took a blink, it was up here. And then you've had nothing. Earnings just accelerated it. That's just a freight train. Out of control freight train. It's hard to jump into those. SPY. Okay, same thing. We're now through the opening range. You can see we stabilized, and that's our opening range. If we can break out of this, I think we're back up here near 496, and we're trying to see if we can't get a push through the rest of the week. If we break down below it, well, then, yeah, I think that there's a bit more consolidation in front of us. I don't know. If we break back below this, I would say maybe 492, and maybe not much of a pullback, but still a pullback. We'll see. We'll see what happens here. Market looks resilient. There's a good amount of strength in this market right now. I think we can be pretty confident in things right now. UNP looks a little overbought. Here's the VIX. I don't know why. Every time I click on the VIX, my whole platform stops and it tells me it's not tradable. I'm not trying to trade it. I just want to look at it. Relax. And you'll notice we gapped up on this thing and then so is that more fear, less fear, less fear? That looks great to support us continuing to move out of this. Right? And it you can see we're up mildly, but we're still in the range of yesterday, or not yesterday, Friday. CFG, Michael said, this is one he's looking at. Take a look. Citizens Financial. See, I took this looks it's not national, but like maybe like just sub, like a large regional. Another one like that for me is PNC. My PNC is your CFG, where I'm like, you look at how it's just kind of veered off to the side. It's now, if you look at CFG and PNC, they're very similar in their construct. Yeah, I like those other ones we looked at better. JPM, City, Capital One, B BK, BX, things like that. But yeah, this is got some volatility. Ford is another one. Ford is looks pretty good. You've got earnings aftermarket tomorrow. Looks like it's kind of stalling out in front of those earnings, waiting for that new information to come out. Okay, Waste Management. Maybe going to give a signal, but maybe not before earnings. We'll see. Walmart maybe pulling. Look how strong Walmart got. Just recovered so strongly. From a sector standpoint, biotech, there's just nothing there. Right? Nothing there. No concern there. Materials dropping down. Nothing in materials. Communication services still look strong. Am I not connected? XLE, iffy. Financials, strength. Industrials, still strong. Technology, still strong. Staples, stable. Utilities, unstable. Healthcare, strong. Consumer discretionary, sideways. That's where we're at. I think we have developing signals still. We'll see what this market looks like. So here's the question for me. Do the trades put on last week, which would be in a couple of, which might be industrial and technology, do they only pause and then continue? And does that continuation create signals in the financial sector? That would be great. That would be great. That's as best we could hope for, because if you're carrying bullish trades, it means you didn't have to get out of them and you can let those ride, enter some new bullish trades, and we have a new bullish window. Yeah, I'm looking for that. But I'm ready for anything. I'm ready for the market. If the market starts to show more weakness, then okay, we switch and we think something else. Let's just be fluid with whatever's happening, ready to go. If a signal comes, my expectation is it comes from the financials, one of those 6 or 7 that we looked at today. Okay, real quickly before we wrap up, don't forget that you owe me 30 minutes. No, 30 minutes twice, twice a week, 20 minutes 3 times a week, or 1 session for an hour. You owe me trading plan time. This week, we're working on record keeping. And you're like, oh, awesome. That's a short one. There's really no work here. The work is to make sure that this is set up. This meaning your record keeping. Now, the way we break this up, week 6 record keeping is on your trade log. Week 7 analytics, you go to your dashboard. The dashboard is doing most of the work for you, but in order for the dashboard to do the work for you, you've got to get your system down to log trades. This log is built for up to 2. There will be a log that can accommodate 3. It's quite easy to copy and paste information from log to log. So if you start one here and then you move over, it's easy to move it. But there is a video that walks you through the videos for this section will be in your emails this week. That will talk to you about what does this mean. There are instructions. These little red hash marks help you understand what does this mean. Exit number 1, exit price expressed as an option price for either the first part or total of the trade, right? That's the price that you exited at. number exited, how many contracts you closed on exit one. So this helps to give you what you're doing. On the trade log, you are filling out the white squares. The grayed out squares are calculated for you. So those are not clickable. The only thing that's clickable are things that you can fill out, which are in here. And that's what the formula uses. Now, one more thing to be very, very careful about. Column D, where it says long and short. You'll notice when I click it, there's an arrow. Don't type, use the arrow. If you bought it, you're long. If you sold to get in, which means if you sell a naked call, if you sell a spread, if you sell something, that's when you're short. Long and short doesn't mean how long do you expect to be in the trade. Long or short means did you buy it or sell it, essentially, to enter. This is how the spreadsheet knows how to run the calculation. So make sure you get that part right, and the rest of the things should work out. That is record keeping. Be a record keeper. There's a great quote from an author who compiled 4 books that are basically just interviews with some of the most successful traders of their generations. And he said, show me a good record keeper and I'll show you a good trader. It's that simple, right? That one is an absolute must, non-negotiable. Okay, that's what we have for the week. I feel like we're in a pretty good place. Tomorrow night, we continue the Trading Foundations second iteration. It's been a lot of fun. We've covered a lot of ground a little bit quicker, a little more condensed. Make sure you join us. That's at 8:30 p.m. The link is in the schedule. And then we will meet again Wednesday morning for a midweek check-in. Thanks, everybody. Have a great rest of your day. And as always, happy trading.